Hey traders, welcome back to my channel. Thank you for joining me. I really enjoy you guys watching me. I enjoy your comments, and I enjoy what people have to say. I've been getting some good feedback on my hedge fund levels, and I really want to show you guys how to really make some good trades in the market. Lately, I've been doing a lot of commodities trading. I really like the futures market a lot. I'm a big fan of the grains. This video is going to be on sugar. It's one of those markets that has another good trending opportunity to take advantage of. There's a lot of things within this market that give us an opportunity to see certain key levels and see certain zones because it's such a slower moving market. It's not as heavily manipulated. It's got a lot of good indications of when to really make the entry. Divergence and certain moving averages come into play very, very nicely. They don't get overextended too much. You can really use these other tools towards using the hedge fund levels in conjunction with them, and I wanted to go over some of that in this video. I'm going to show you how you guys can use that and really make a good trade decision based off of using it in conjunction with my hedge fund levels. Okay guys, so let's get into this video and let me show you how we can really take a good trade in the futures market.
I'm coming in hot.
Alright traders, here we go. What I want to point out to you guys on the screen, first off, if you guys are new to my channel, I know you guys are probably familiar with these moving averages on the screen. Right here I have my custom MACD. I like to use it as a 6, 12, and 1. It breaks down the lines and makes it very simple, very easy to follow. On top of that, if you guys are probably looking on the screen, the one thing that stands out to you the most are these red and green arrows. That is my proprietary hedge fund level software that lets me know where the big institutions are stepping into the market to make trade entries. Okay, so right here we have this red arrow represents a big volume flush of liquidity that came into the market to push the market down to the downside. Okay, and these green arrows represent pushes of volume coming in to push the market to the upside. As you can see, all these green arrows acted as a support level, okay? And these red arrows kind of acted as a resistance level. What I like to do when it comes to taking entries by using them, I like to use them as a way to find falling reds to look for a chance to go long and rising greens as a chance to go short. Okay, so another thing I want to point out and let you guys know right away is if you guys are interested in using them and you want to try them out yourself, you can get in contact with me, reach out to me. I offer a free one-on-one demo. You guys can I can cut you guys a trial key and you can use them from your own computer anywhere in the world, test them out, try them out for free, literally for free. So I like to get some feedback on them and you guys can tell me what you like about them. On top of that, I'm going to show you guys how we can use them with divergence and moving averages to really make a good trade decision in the market, okay? So here we go. I'm going to show you guys how we can really give you guys a strategy today. And I've done this in some of my other videos. I want to show you guys how we can optimize our trade entries, okay? So here, what I want to look for, I'm going to draw out my lines first with my hedge fund levels. What I'd like to do is connect the falling reds, okay? So as you can see already, you're probably thinking, well, wow, that connected to that. All I have to do is, take the entry to go long. And that's pretty much what you got to do. That's all you got to do, really. But I'm going to show you guys how we can really, really optimize our trading decisions. So right here, let's draw this from here. There's your divergence connecting with here. Now you guys have divergence. You have an overextension on the 15, the 20-day, and the 50-day moving average. You can see that right where the price penetrates the trend line on the falling reds, you guys can see that the moving average is penetrating the 50-day moving average. So that gives you more confirmation. So there is your confirmation on the moving averages, on the divergence, and on the penetration of the hedge fund level line. Okay, so take a look at it from here. On top of that, we can go even a step further. I'm going to give you guys even another one. Let's draw out our support level. Look at that now. If we zoom this to the left, look at that support zone to the left over here. Price has come down to a very key level on the 60-minute time frame, as you can see. And as we look closer, we can see that we have a very strong support level. When divergence presents itself at a support level, on top of having a very extended line on the moving average, as you can see, we even crossed the 200-day EMA as well. It just makes a very good trade opportunity. You want to look for these types of trades. Traders who trade all day long, every single day, they're not good traders. Those are the kind of people who are degenerate gamblers. If you're one of them, I'll be honest with you, I probably used to be one. I probably am one at one point, when I was trading, I used to sit there and try to figure out how to trade all the time. But that's when I started thinking to myself, how do I figure out how to really make my trade entries right? And that's when I came up with my hedge fund levels, and I really defined where volume and time comes into play, and that is how you want to decide where to really make key entries, because that is how you trade with the big institutions. You want to trade with the big institutions because those are the guys that are making the moves in the market. As you can see, from this arrow to this arrow, it connects, and that tells you where the entry of when the next move is coming in. Right here, we've based out from here to here. You're probably thinking, okay, well, price comes down to this level. Should I take my entry? And yeah, right here, if you would have taken this entry up to here, you probably would have had a nice little move up to the upside, but it would have fallen back down, and you would have chopped around some, and then you might have gotten flaked out, and you might have cut the trade, because you might have just felt, well, is it going to go? Is it going to keep going down? Because it kind of does keep trickling down. It does go past your entry point right here if you were to enter around this area. But as you can see, if you waited for my hedge fund level to print on the screen with this arrow, this entry is damn near perfect. I mean, right here, wait for price to break the line. You see that the 15 and the 20 crosses the 50. All of a sudden, now all of a sudden you've got divergence that's breaking up to the upside. You've got the support level. On top of that, it's pushing up to the 200 EMA, and there you go, guys. Let's zoom this forward. Look what ends up happening. This trade is still going if you were swing trading this into the next couple weeks. Like, this is a great trade. And you're probably saying, yeah, he's cherry picking and all that because he's going back to look at it. But let me point something out to everyone that says anything like that. My hedge fund levels are a forward moving indicator, which allows you to wait for the arrow to print on the screen. So all you have to do is basically wait for it and be prepared to take the entry. And your stop goes at break even. So that's all you're doing, guys. It's a very easy strategy. It's a very useful indicator because it's one of those indicators that is a forward moving indicator. It's not a lagging moving indicator that you're hoping is going to give you the gamble on whether this is a good trade or not. That's what I like about it. Okay, guys? That's the great thing about it. Okay? So here we can see this. So as you can see here, guys, we have another opportunity to go short here. We have rising green, rising green, rising green. Before this green prints, you would draw this here. You would be prepared and you'd be waiting for it. I'm just going to draw this as a small line just so you guys can get the idea. But really, I would have this really extended out if this was the actual trading session. So for here, you can see that this one never penetrated the line. Okay, what about this one? So now you draw from the next one after you see this one print, so you connect this one to this one and you extend it out, and you can clearly see that price penetrates the line. Okay, what else do we have here? Okay, let's take a look. Do we have divergence? We do. We have divergence right here. Okay, we have divergence, so we draw out our divergence. On top of that, we have it coming up to a clear resistance level. Price comes up to this resistance level. If we look to the left, you should be prepared for that anyways. You should be looking at that. And then on top of that, price breaks down to the downside for a good little small trade entry to go short, and you would have made money. You would have made money. This is a very good opportunity to go short, and regardless of how big the move was, you have the same opportunity as anyone else to buy more contracts and really up your size and have a very clear entry to take an entry based off of my hedge fund levels that are telling you where to go in the market, as well as being as an overextension where we're well above the 200 and the 50-day moving average. Okay, guys? So that's something that you guys want to look for. Same thing here. Draw this one out. This is now you don't connect this green to this green because it's a falling green, so you don't even bother drawing that out. But this one, we have another one to here. We draw this one out. Price penetrates the line. As you can see, we clearly have a break in the 50 as the 200 and the 15-day EMA. Excuse me, as the 20-day SMA and the 15 EMA breaks the 50 SMA on the orange. The oranges are 50, guys. So from there, we have a nice trade to the bottom again. So yeah, we didn't get divergence on this one, but it's still a great trade, guys. Still a very good trade. So just be aware of those things. Those are things you want to look for. I'm just giving you guys the setup. I'm showing you guys how to really take advantage of the trade entry. Like right now, I want to look for a short. I'm looking for a short in this one. We have a rising green here, rising green here, rising green here. So I basically had this one. I would draw this one to here. This is what I'd be looking for in the live market right now. So this one would be drawn out like this. Okay, does price ever break this one? Not yet. So does price ever break this one? This is what I'm looking for. So you would basically eliminate this one. Here we go. And I'm looking to see, does price ever break this one right here? And that's where we're looking to take the short. Okay, that's how I'm looking to do this. As you can see, I can even see this starting to set up clearly if you guys are noticing it too. What do we have right here? We have some divergence that's starting to form right here. Okay, so I'm looking for a good short entry on this move right here. On top of that, yeah, it's at a new high right here, so it probably, might start to make a move to the downside at some point. We have a clear extended line. As you can see, the 15 is breaking through the 20 again. So yeah, guys, I'm starting to feel like this is about to come down. If you guys are looking to take an entry on the sugar market, this is a good short coming up. So that's what I would look for. Let's look for some quick other moves right now. Let me show you guys some other stuff. Rising green, rising green, rising green. There we go. Let's draw this one out to there. There you go. There's your short. It's that easy. You guys are just waiting for the arrow to print. Here's another one. Following red, boom. There's your entry to the upside. Boom. That's it. It's that simple. Here's another one. Following red, draw this out. There's your entry to the upside. Boom. You're just waiting for the arrow to print. Okay? That is it. It's that simple. I can see move after move after move. I'm not going to go over every single little arrow entry, but I'm sure you guys can see it too. It's very simple. Following red, draw this one to here. There you go. There's your entry to the upside. Boom. Simple, guys. You're just waiting for it to print, and that's it. That is it. Okay? It's very simple. I hope you guys can see what I'm pointing out here. I really want traders to start getting accustomed to what they can be taking advantage of in the market. I really want to show traders how to use the hedge fund levels. It's something that I think is magical. I mean that, and I stand behind it. If you guys want to try it out for free, go ahead and contact me. So, remember to like and subscribe. Subscribe into my email list as well. Go ahead and let me know what you guys are thinking. I appreciate the comments. I appreciate the feedback. So go ahead, traders, and best of luck to all your trading. All right, guys?